Good afternoon, ladies and gentlemen. The topic I have here is about key economic factors driving investment in the mining industry. And you can speak for it for hours and still not make any sense. So what I did was I'm just going to focus on a few aspects of the sector. I'm going to focus on a few industries within the mining sector and talk about specifically the economic factors. First of all, just a brief about ABN AMRO as such. We are now held by the Dutch state. We've gone through a series of changes in our management and shareholding structure in the last 5 to 6 years. Today, ABN AMRO is the second largest bank in the Netherlands. Within our sector, which is ECT, which stands for the Energy, Commodities, and Transportation sector, I manage our commodity segment specifically. So it's a little bit of a related sector to mining. And we have been exploring how we can expand our product offering in the mining sector as well. Very briefly, the most relevant sector within ECT is the Mining and Metals Department. It's a 15-year-old sector that we have representations globally in US, in South America, Europe, Singapore, Hong Kong, and in Dubai. I won't bore you with all these details, but please feel free later on to ask us any specific questions that you might have about our bank. So what are we really talking about? Without trying to offend anyone really on the first statement, all we're trying to say is to repeat actually what Bill Clinton was trying to explain to George W. many, many years ago. It is the economy. At the end of the day, it's the economic aspects that will relate a decision-making process. And that is in any industry. Mining is no exception. But what it also means is we're not going to talk about today on the legal and political factors, which are as important, if not even more important perhaps, in a sector such as mining. In terms of timelines, we're going to look at the investment decision aspect per se. We're going to focus on the fundamentals of demand and supply and how those make it relevant in the mining industry for investment decisions to take place. On the second side, we're going to talk about the commodity supercycle. Believe it or not, ladies and gentlemen, this is one of the most important questions each one of us has to answer for ourselves before we are going to seriously talk about any investment in any mine, which is relevant in this sphere. We'll briefly touch upon that as well. I have a view. Each one of us has a view, and let's see where that helps. Some other things on demand and supply, but I think let's just move on because it's a short time. The first thing we're talking about is really timing. In terms of economics, the focus, as I say, we're going to exclude the political, legal, and environmental aspects. However, again, just to touch upon the environmental aspect, say 10, 15, 20 years ago, the environmental aspect was perhaps important. Nowadays, it is really critical as well. So you cannot really discount the rest of it, as I say, which are all very key. Just down the slide, if you look at it, the political and legal aspects are also relevant if it depends on the country of investment. If we are going to talk about Australia, Canada, Chile, Brazil, political aspects are important, yes, yes. But if you talk about Africa, you bet. I mean, you really want to get into the mechanics of what sort of licenses structures do you have. We have recently seen in a country which I would not like to now talk about, but where the licensing structure was revised in the last 3 years, and the company had to pay licensing costs 3 times because of a change in regime. But it just gives you a bit of an idea, and this is just a processing industry. If it was a mine with an economic value going into billions, you can imagine into the issues that might possibly have taken place. Moving on, in any mine, I mean, I'm sure most of you have an idea on this. It's basically a product life cycle, if you can call it. The first point is expansion, but which is perhaps not the best explained. It's basically talking about due diligence, and then with exploration, evaluation, and development. Here, just one aspect, protectionism in certain countries work in different sectors differently. When you talk about land, I now talk about land, not just mining. If the land is for agricultural purposes, the concept of protectionism is far higher than, say, if it is for mining. We were just talking about Venezuela as well. That's another case in point. Many other countries, also in Asia, for example, when I talk about India, protectionism in agriculture is far more than mining per se. Talk about the supercycle for a moment. I must apologize, it's not perhaps very clear for you, so I will just take you through it. The first part of the chart really is talking about consumption, and the second part is talking about prices. Now, both of these, as you can imagine, have seen an accelerated growth between 2000 and 2014. Most of these commodities we're talking about, the first one, the white one on the top, is a iron ore consumption. The second one in yellow, I think it is, talks about oil. If you just break it down into demand and supply, does it mean that in the last 10 years, 12 years, that we are now having a consumption which is far higher than, say, 15, 20 years ago? Yes. But that's also because of population growth. That's also because of the fundamentals in the way we lead our lives is very different. The concept of personal computing has made sure that the energy utilization is far higher. Today, an average battery that we use almost takes up more energy in making it to the battery than the actual use of it. So if you look at a carbon footprint, it has exploded. It's going to explode even further. The point is, commodity prices, consumption, they all have a sort of pattern. And this pattern we're trying to explain in the next slide. If I can very simply talk about it, it's like a huge lake, and you talk about putting a pebble on it. A pebble is actually the price. And as the pebble falls in the lake with a few ripples, you see the lake making ripples on the demand and supply. And obviously, at some stage, the pricing will be oversold. At some stage, the demand will be oversold. But eventually, they will find an equilibrium. Until, of course, a new set of demand and supply characteristics take place, and the whole aspect, the whole equation changes. If you look at the next slide, which is also a rather interesting slide, we're now trying to map the global investment in the mining industry. The global, and again, as I've mentioned before, we are focusing specifically on iron ore, copper, gold, and nickel, which essentially are about 3/4 of the mining investments globally. If you see down here on the first chart, the blue, which is the bottom segment, has a tremendous growth. I think I've not really calculated the percentage, but obviously you can see in 5 years it has more than doubled. It's the same for copper as well. Why would that be? I mean, obviously, the most common example one can think of is China. A lot of iron ore consumption in China, steel industry in China, which has made an astounding sort of change, or changing the, in fact, the demand-supply mechanics. But if you take a few steps back, how do you price a commodity? Yes, there's demand. Yes, there's supply. But if you look at it from an economic level, does the final product actually do something in the economy? I mean, in China, there are obviously a lot of construction projects, which we call, I don't know, ghost towns. You know, there's nobody living there. There are buildings, but there's nobody living there. There's hospitals, but there is nobody there. So you need to think about those investments in steel, in potentially mining, that have gone into it today have not yielded any economic result. So if you take another step back, you talk about the economy, you talk about the GDP, consumption, investment has to yield an increase in income. But there is no increase in income. All it made sure was the population was employed for a period of time, and that building was built. So I think these are really the aspects which one has to think about when it comes to pricing. And why are we specifically talking about this is because one has to make a view about the commodity supercycle for each of these sectors. We have seen tremendous growth. Where is that going to take us? Very briefly, to take you on the second graph as well, what I've done is the blue, to make it more relevant, I have called it MEA, which is Middle East and Africa. Because if we just focus on Middle East and North Africa, then it's not that meaningful in terms of comparison. And that's where, actually, if you look at MEA, there is also a substantial growth taking place in terms of regional mining investments. Economies, governments have had to make sure that they are open in their discussions, and they have a more longer-term viability of investment proposals that have been accepted. Latin America remains the number one, as you can see, but again, North America is very quickly taking up ground. So, just very briefly, not specifically related to our industry, but we were just talking before, we were talking about the shale gas. Everybody likes to talk about shale gas. That's the next big thing. But you know what? It was always there. In 1955, it was already found out. It was there. It just didn't make sense in the 60s, 70s, 80s. People started talking about viability studies and the costs of transportation. My point is, nothing becomes a fad suddenly. It's always there, but it is the economic aspects which make it relevant to talk about now or in future. New mining projects. This is also a very interesting slide. I would like to think that our sector in the mining industry today, if you look at it as a potential asset class, it is one of those most resilient asset classes. Even when most of the world has had a tremendous dip in growth, not necessarily have the mining projects gone down. As you can see here, the blue, the left chart talks about the value of new projects, investment projects taking place in the last 6-7 years, and the number of new projects as well. And the chart on the right specifically talks about copper as just as an example. But first, on the left, as you can see, 2008, well, for a lot of us, I mean, it was a different way that the world started reacting to economic circumstances. Having said that, it is not that 2009, the blue slab was zero. No, it was still a good chunk of investments that took place. And as the prices slightly corrected, as you can see, a multiplier effect that you see that the investments in 2009, 2010, and 11 almost came back to normal. It's also something that we recognize, I'm sure. Mining is like one big vessel. I mean, I would not like to say Titanic, but it's like really a huge vessel. It takes a long time to make that change in steering. However, once you have made that investment, you are in there for the long term. We do not really look at the last 12 months, 20% reduction in prices. No, we're talking about the next 30, 40, 50 years, far beyond our lifetimes. That is the kind of investments, that's how the investors look at mining. Just a very brief, if you look at today, investments in mining globally, a large part of it comes from iron ore. And what I'm trying to get here in this slide is to talk about how, on the right side, how price and economic indicators, transparency becomes important in an investment-making decision. In the case of iron ore, yes, a large part of it goes towards steel. That's the demand aspects of it. Scrap becomes important as well. That is, again, in any commodity sector because of improvements in technology, also because change in the production processes. It's sort of a demand which becomes proportionately lesser. And certain minerals and certain metals have different ways of recycling. So for steel and iron ore, the transparency is medium. And there's also a good price risk mitigation. However, only for the moment, I believe not more than 20, 25% of the iron ore globally is hedged, price hedged. but it's a start. 27% comes from copper mines, which is, and also, sorry, in the first one, steel, construction mainly. Yeah? That's what we're talking about. Construction, China. Copper mines, it's electrical, it's used for a variety of different end uses. However, the transparency is high. There's a very large hedging mechanism in place as well. Similarly, for the gold mines as well, the transparency I put medium because it's in different countries, it's in very different countries where the transparency for economic data, transparency for making investment decisions may not always be that transparent. So the conclusion, again, if you talk economic speak, demand supply is very much fundamental in the way of thinking. In terms of a Keynesian concept, where we say, John Maynard Keynes said very many years ago, in the long term, we are all dead. Well, I think he was wrong when it came to mining, because we have to think long term. There is no short-term thinking in the mining industry. You can have a few companies or a few funds with a sort of shortish view on making some due diligence because of their extremely expertised sell. But by and large, it is a long-term sector. It is a sector where you want to look at transparency of information. You want to look at where mismatch can be in the volumes. You want to look at where the end products could be exported, whether there's a large local market. There are a lot of aspects which you need to consider before looking at the viability of mines. One final thing, if you look at the types of projects, we find that the gap between greenfield and brownfield projects, that's reducing over time, which is essentially what it means is it's a zero-sum game. But once you have made a good economic use of your existing mine, it's perhaps better to have a smaller or a different greenfield project rather than try and explore this. But this is now. Who knows in 50 years' time, there's another person standing here who's going to talk a very technical speak, and he's going to basically say you can drill down to the ore of the earth and who knows what. So the possibilities are endless. But for the moment, it's economics. Thank you.